beautiful traders in the house. Great to have you here again today. It's a new week, a beautiful new week, and a week of wonderful opportunities. The week has just started, and we are already cashing in and raking in some profits based on last week's analysis. I hope you were there to capitalize on this. So, as always, I'm Atamashi Daniel, Vest Strategies Global Market Analyst. Welcome to the new week, 23rd to 27th of June, 2025. Let's see what the week holds for us. Let's see what our fundamental analysis is about. And the pairs I want us to look at this week include the NZD USD, the AUD USD, the USD CHF, and gold. Okay, and perhaps also Bitcoin and Ethereum as a consolation, yeah, to what we have going on this week. So this week we have the US flash manufacturing PMI data, all right, and the existing home sales expected today, Monday. PMI data from the US should affect these pairs, especially from the EU too. We have that coming up. All right. If we have poor PMI data, of course, you know that the PMI data is the purchasing managers index. And what does that do? That talks about a survey, the survey of the economy based on the manufacturing end of things, talking to purchasing managers in the manufacturing end of that sector, right? Services also covers survey pertaining to the purchasing managers in the services industry as to how they feel about the industry and its expansion. Now, anything lower than 50 is usually not good for the US. Higher than 50 is quite good. Less than previous expectations, significantly less than that is also not good for the US dollar. But if higher, definitely also good for the US dollar. So be on the lookout for that and pay attention to this data today. Uh, so Fed Chair Powell testifies tomorrow, Tuesday, before the House Financial Services Committee. You know, the thing about these meetings are the comments between the Senate Committee and Fed Chair Powell could also influence the US dollar and pairs tied to the US dollar. So you want to pay attention to this tomorrow. All right. Um, so we have the USCB Consumer Confidence Data and Richmond Manufacturing Index also released tomorrow, Tuesday. This is a sentiment analysis really to see what the industry is about and the manufacturing sector to see what abound pertaining to the Richmond area of the US. And why is this important? Because these sorts of measures, okay, it's like a composite index based on solid manufacturers in the Richmond area, okay. Above zero usually indicates improving conditions, and below zero usually indicates worsening business conditions in terms of shipments, new orders, and employment. All right. This is medium impact news, the both of them, CB Consumer Confidence and Richmond Manufacturing Index. Medium impact, but when you combine the both of them and the Fed Chair Powell testimony, they could cause some volatility in the markets. So be on the lookout for that. What else? So Wednesday, Fed Chair Powell also continues his testimony before the House Financial Committee. Again, pay attention to hawkish or dovish comments from the Fed Chair Powell. All right. And then on Thursday, we have the US final GDP, 26th of June. Of course, that's very important considering the tariff wars Donald Trump enacted earlier in the year and the impact this has had, especially with orders from China, massive imports initiated by small scale and medium scale enterprises, so as to be able to beat the tariffs early enough. The fact that this caused a negative GDP the last time this was released, that was not good for the US. And this time around, all eyes are on this data to see how the tariff wars affected the US economy, okay, going into the second quarter and all that. So pay attention to this. This is very, very important, okay, the US final GDP for Thursday. Now, that same GDP data, by the way, is expected to cover um, the first quarter, okay, and it's usually released about 85 days after the quarter ends. So this is data for the first quarter, all right, of of 2025. This is very important. Pay attention considering the tariff wars that were initiated earlier in the year by Donald Trump. We also have the unemployment claims, significant data, and then the core durable goods or durable good orders um, released should be released also on Thursday, and final GDP price index. All these three combined are medium impact news, but when you combine them together, could impact the markets um, going forward. So another key important data to pay attention to here is the pending home sales. Considering the rate cuts by by the Federal Reserve Bank since last year, this should start showing up in the mortgage market in the US. So you want to pay attention to this to see how this could impact the US economy, especially the US dollar. Now, the core PCE price index is also very important because it measures the inflation, okay, changing the prices of goods and services, excluding food and energy at the consumer end of things. So pay attention to this for Friday, all right, for the US economy. And of course, all these pairs are tied to the US dollar. So they are very, very significant. And of course, Trump's tax cut going up the ladder apparently is good for the dollar, um, for the companies across board, and the fact that they have to let go of very little taxes or few cash from their earnings. So this is good for the US dollar generally. And let's see um, how that plays up going up whether it's going to go up in Congress continuously or not. Now, there's also another flip side to this in the sense that this is expected to take away the healthcare, um, uh, the Obamacare initiative started by the US. So it's relative. Could be good for the US, could also not be good for the US dollar, depending on how you look at it. The Obama Healthcare Initiative has um, empowered a lot of Americans, poor Americans, to good healthcare. Now, when you take that away by trying to fund, by bringing in a Trump corporate tax cut, okay, in other words, if you reduce the taxes on companies, the earnings from there will reduce, and then that's to make up for that is supposed to come from Obamacare. Now, it's a sort of it's shaky, all right, it's quite shaky, but let's see how it plays out. Um, what else? So the escalation of attacks between Israel and Iran, if it continues and it worsens, gold could appreciate as a safe haven currency. In times of crisis like this, gold tends to appreciate. Okay. Um, Pay attention to this. What else? The US dollar as a safe haven currency also could also appreciate. And the Swiss, so also the yen. So pay attention to this very strongly. If America intervenes in this war, and brings it to an end, or perhaps tries to create peace between both parties, the safe haven buying of gold could reduce and could see a depreciation of uh, the gold XAU USD, all right, going forward. Now, for Bitcoin and Ethereum, of course, we know that all these tariff war escalations, global uncertainties, and all those risks and crises we're having could would boost volume of positions or transactions on crypto out of fear of uncertainties in other markets that are tied to such events. All right, so pay attention to this. Now let's go into the charts and see what the charts have in store for us. So we're starting with the NZD USD or the AUD USD rather. Now we've captured all our take profit levels from last week on this guy, but we see that there's still some sort of negative divergence playing out. Okay, if you also connect the lows, uh, you see some sort of negative divergence. If you connect the lows, it's still visible, right? The lows and the highs, negative divergence playing out on um, the AUD USD 4-hour chart. On the same 4-hour chart, we see a price moving across along an ascending channel. All right, it's broken strongly below this ascending channel right now, and it's been strongly bearish based on predictions from last week. We captured our take profit levels. So for me, my key support area will be the psychological level of 0.6400. If price breaks strongly below that, we could see it touch upon 6374. If it goes below that, 6354, and below that, 6331. If you want to be conservative, okay, if it breaks below 6400, it could touch upon 6390. Why? Because you know the Aussie doesn't really move far in volumes. So sometimes tight trading for the Aussie and the Kiwi is quite good. So these are key support or target levels for me, the Aussie. On the resistance end of things, if price manages to break above 6450, which is very highly unlikely, but if it manages to do that, then I'll consider buy positions perhaps to 6478, above that 6500 psychological level, above that 6520, and above that 6545. Okay, 6545. You can see the levels right there. You can see the levels right there. Now, conservatively, if it breaks above that level, and I want to trade to short targets, of course, because we know that the Aussie doesn't really move far. Many times it's been known for to do this. I'm going to target 6462 if it breaks above 6450 on short-term targets. Okay, for the AUD USD. Now, for the Kiwi, for the Kiwi, what do we have? The Kiwi also has broken below an ascending channel right here, broke past it, and was massively bearish throughout the course of Friday and today, Monday. We got negative divergence still playing out on the 4-hour chart, as you can see right there. Now, for me, yeah, from last week, all take profit levels have been captured, as you can see right there. All of that has been captured. 1, 2, 3. Now, for this week, my key support area is centered around um, 0.5923. If price breaks significantly below that, okay, then our target 5901. Below that 5879, and below that perhaps 0.5855. If I want to be conservative, because I know that the Kiwi and the Aussie often move within tight ranges, I probably target 0.5910, okay, as the target level after the break of 5923, ladies and gentlemen. But if price happens to break above 5965, we could touch upon 5987. Okay, if price goes above 5987, it could touch upon 0.606, 006 or 000 psychological level. Above that, perhaps 6025, above that 6453. That's for the Kiwi. Now for gold, what do we have for gold? Now, gold has been moving very nicely along um, an ascending channel, as can be seen right there, very nicely along an ascending channel. But the behavior of this guy can be seen playing out around the 50-day moving average. Okay, we can see that, of course, way before now, before 21st of June or 28th of May, it's still being respected the 50-day moving average. All right, but for the sake of recent activity, you can see right here 1, 2, 3, 4, 5. It's been very, very peculiar about the 50 EMA, refusing to break strongly below it. So for me, my key support area will be around 3317.0. If price breaks strongly below that, then I'll target 3251.9. But if I'm looking for closer levels, I'm going to be trading within this descending channel right here. First, let's look at the ascending channel. Price has been moving nicely along it. It's currently at the support border right there, the red line. Okay. And what's been happening? Look, it also is moving, it's moving within a descending channel while within an ascending channel. So you have a descending channel within an ascending channel, good reference point for target levels, all right, or take profit levels going forward. Hence, for me, if price breaks below 3346.87, I'm going to target 3339.0, below that 3328.8, and below that 3317.2. And that's my key support area back on the daily chart right here, as you can see. Okay. If price goes below that, then I'll target 3300 psychological level. And below that, finally, 3251.9. I'm just going to put the line right there, 3251.9. There you go. Now, being conservative below that, before that, if you want to be conservative, then we could touch upon 3278.7, meaning if price breaks below 3300 psychological level, we could see price touch upon 3278.7, and below that 3251.9 on gold. Now, If price happens to return back into the channel, all right, and breaks above 3372.2, we could touch upon 3383.4, and above that 3391.5, above that psychological level of 3400.0, um, definitely above that 3410. Now, these are tight levels because of the various swing highs and swing lows that have been formed within this range in the past couple of weeks. So be very careful around these levels. They are tight ranges, so scalping or intraday positions are quite good around here. And if price happens to go past 3410, then we could touch upon 3426.8, and above that 3451.7. Above that, finally, perhaps 3470.5, which could coincide with the resistance border of the 4-hour channel right here, ascending channel as can be seen. Again, the crisis in between Israel and Iran would worsen, further strengthen the safe haven buying of gold, and it could push it strongly upwards. If America escalates the war, of course, gold is going to appreciate. If America uh, de-escalates it, then we could see a depreciation. If we get a rate cut, the earlier hours of this morning, we had a Fed governor, right, come out to say that there's a possibility that the Federal Reserve Bank could perhaps cut interest rates as early as July. If that happens, then we could see some depreciation on the gold, XAU USD going forward. So be on the lookout for that, especially if Fetcher Power makes such comments in the testimony this week. Now, the Swiss, the USD CHF. What do we have on this guy? So we've captured all take profit levels on this guy, right? Based on outlooks given. Um, on the daily chart, we see some sort of positive divergence right there. Very nicely placed. Okay. And for me, my key support area, my support area is centered around 81336. Okay, 0.8133. If it goes below that psychological level of 8100 could be my target. And my major support region, as we see right there, seems like a double bottom is formed here and here. If it goes below 8070, then my target level will be 8040. Okay, on the USD Swiss. Um, Above that, if price breaks above 8194, we could see it touch upon 8241, and below that 8275. Above that, rather, 8300 psychological level, and above that 8330. Now, this guy has been moving nicely bearish. So for me, I favor a brief bearish drop before a rise. So I see price trying to execute a brief bearish drop, perhaps today, tomorrow, before an eventual rise. But if it breaks below 8070, key support area, then I'll be thinking of lower levels, possibilities of hitting lower levels. And that's also quite possible because, again, we see price break below the range of this strong bearish candle right here with this bear, and the Swiss being a safe haven currency could also be triggered on massive buying right now. In other words, bearish positions on USD Swiss based on the safe haven asset of the safe haven strength of the Swiss. But then again, this is a battle between the US dollar and the Swiss, and if I have to pick which safe haven currency has more sway, I'll go for the US dollar. So be very technical. Against other pairs, the safe haven strength might play out, but against the US dollar, maybe not so much. So be on the lookout for this. And my outlook again, I'm briefly bearish, okay, and eventually bullish in the long term if I see a break of my key resistance levels on the USD Swiss. But for now, the general outlook is still looking quite bearish. All right. Um, for the AUD USD, I favor bearish positions until I see a break of key resistance level. For the Kiwi, I also favor bearish positions until I see a break of key resistance level. For the um, for gold, I favor bullish positions. All right, unless I see a change in the global dynamics and a break of key support level. So be on the lookout for that. Now, the last but not the least, Bitcoin and Ethereum. The almighty Bitcoin and Ethereum. Also, we captured almost all take profit levels. Our fair value gap recovered based on negative divergence, as can be seen right here. Okay. Now, for this week, We see negative divergence nicely on the daily chart. RSI negative divergence. All right. And price is currently trading below our key support area of $100,000, 104.06. If it goes back down below that today and within the course of the week, then our target levels 99453.4, below that 98340.5, and below that 96947 point 1, below that 95823.0, which will coincide with the 200-day moving average and the 100-day moving average, as can be seen right here on the daily chart. Okay. On the flip side, if it heads above 102583.6, then I'll touch upon 103592.2 as my next target level, and above that 104461.7, above that 105470.3. As you can see, the levels right there. My outlook on this guy, because of how it's formed with the Elliott wave analysis and the heads and shoulders, as can be seen here, here, and here, I still favor bearish positions on Bitcoin. Okay, but I want to see a break of key regions on Bitcoin. Now, Ethereum. Ethereum has recovered all take profit levels from last week. 4 take profit levels on Ethereum. Very beautiful money. If you traded this, congratulations to you. All right. I advise they sell for 4 take profit levels on Ethereum, and all have been captured and recovered based on the fair value gap, which can be seen in the red rectangle right there. A very nicely placed fair value gap. Now, for this week, if price continues its bearish momentum and closes strongly below 2159.3, then my next take profit level will be 2100.1. Below that, 2042.1, and below that, the psychological level of $2,000. If price happens to go above the key order block level, as can be seen right here, as 2359.6, then we could see price touch 2446.5. And if it goes above that, perhaps 2559.9, above that 2665.8. I'm bearish on Ethereum. I favor bearish positions more on Ethereum. Okay. So this is this. Provided I don't see a break of key resistance levels, I'm open to short-term bullish and bearish positions on Ethereum and Bitcoin at this moment in time, because Bitcoin is playing around the moving average. So you want to be very careful going forward. All right, ladies and gentlemen, it was great to have you. Thanks for joining for the weekly outlook. I'll see you again next week. Have a beautiful trading week. And remember, the trend is your friend, and trade within the trend. Have a good one. Bye bye.